Good day everyone, welcome again to another episode of tax training, and today we'll discuss to you about the new income tax rate under the Republic Act 11534 or the CREATE law. So this is embodied in section 3 about the corporate income tax rates. So these are the new rates under the CREATE law. So the type of the corporation and higher between the regular or minimum corporate income tax rate or the MCIT rates. So we have the regular rates and the MCIT rates for corporation. For domestic corporation, the rate is 25% effective July 1, 2020, and MCIT is 1%. Also, the effectivity is July 1, 2020 to June 30, 2023. And for July 1, 2023 onwards, balik na po siya sa 2%. So, 1% lang siya from July 1, 2020 to June 30, 2023. So, bali 2 years po siyang nag 1%. So, for corporations with net taxable income not exceeding 5 million pesos and total assets not exceeding 100 million pesos, excluding the land on which the particular business entity's office, plant, and equipment are situated, the income tax rate is 20%, effective July 1, 2020. And MCIT is 1%, effective also July 1, 2020 up to June 30, 2023. After that, beginning July 1, 2023, it will revert back to 2%. The MCIT rate. For proprietary educational institution and hospitals, it is enjoying preferential rate. So starting the CREATE law in July 1, 2020 to June 30, 2023, the rate is now 1%. And effective July 1, 2023, it will revert back to the regular preferential rate of 10%. Okay, so for foreign corporation on taxable income, net of gross income as applicable derived from sources within the Philippines. So the resident foreign corporation, the regular income tax rate is 25%, effective July 1, 2020, and the MCIT rate is 1%, effective July 1, 2020 to June 30, 2023. For offshore banking units, offshore banking unit shall now be taxed as resident foreign corporation upon effectivity of the CREATE law. So, ang offshore banking units, tax na sila as resident foreign corporation. So, the tax rate is 25% upon the effectivity of the CREATE law. And then, for the MCIT, 1% until June 30, 2023, and beginning July 1, 2023, the MCIT rate is 2%. For regional operating headquarters, the regular rate is 25%, effective January 1, 2022. And the MCIT rate is 1%, effective January 1, 2022 to June 30, 2023. And it will revert back to 2% starting July 1, 2023. For non-resident foreign corporation, 25%, starting January 1, 2021. So, MCIT is not applicable to non-resident foreign corporation. So, the MCIT is imposed beginning on the 4th taxable year, immediately following the year in which such corporation commences its business operation, when it is greater than the regular income tax computed for the taxable year. So, yun po yung MCIT, the minimum corporate income tax. Domestic corporations shall account separately in their annual financial statements the cost of the land on which the particular business entity's office, plant, and equipment are situated, and shall not lump the same in one account title nor consolidate its cost with other fixed assets accounts. Why? Kasi excluding na po yung cost ng land in the determination of the threshold for the assets of the domestic corporation. So yung threshold na 100 million, hindi kasama doon yung land. Okay. So in the case of proprietary educational institutions or hospitals, if the gross income from unrelated trade, business, or other activity as defined under Section 2 hereof exceed 50% of the total gross income derived by such educational institutions or hospitals from all sources, the tax prescribed for domestic corporation shall be imposed on the entire taxable income. So ito yung sa mga educational institutions at saka yung proprietary hospitals, no? Meron tayong video separately to discuss on that. O may mga examples tayo dyan. GOCCs or government-owned or controlled corporations, agencies, and instrumentalities, except the government service insurance system, the social security system, the home development mutual fund, the Philippine Health Insurance Corporation, and the local water district shall pay such rate of tax upon their taxable income as are imposed upon corporation or associations engaged in a similar business, industry, or activity. So yung mga GOCCs, government-owned or controlled corporations po na may mga proprietary functions or nagninegosyo, subject na rin po sila sa tax, no? Examples po natin, these are the illustrations. A, domestic corporation. LMB Corporation, a retailer, has a gross sales of 1,400 million with a cost of sales of 560 million and allowable deductions of 150 million for the calendar year 2021. Its total assets of 180 million as of December 31, 2021. Audited financial statements includes the land costing 50 million and building of 25 million, in which the business entity is situated with an aggregate amount of 75 million as fixed assets. Assuming calendar year 2021 is the 5th year of operation of LMB Corporation, computation of income tax whichever is higher, between regular rate and MCIT shall be as follows, no? Kasi when we compute the income tax, we have to compare whichever is higher. The MCIT, formerly 2% of the gross profit, or under the CREATE law 1%, or the regular income tax rate under the CREATE law 25% or 20%, and the old law 30%, no? So you have to compare whichever is higher, and the higher is the ones you are going to pay. Regular rate. So the gross sales is 1,400 million. The cost of sales is 560 million. So the gross income by deducting cost of sales from sales is 840 million. The allowable deductions is 150 million. So the net taxable income is 690 million. The regular rate is 25%, so the tax due is 172,500,000. That is the regular rate. Minimum income tax rate, no? Ito yung MCIT. So the gross income is 840 million multiplied by 1% MCIT rate. The tax due is 8,400,000. So since binangan natin whichever is higher, so anong babayaran natin? The higher, which is the regular rate of 172,500,000, and not the 1% na minimum corporate income tax, kasi lower yan. Example number 2. GPL Corporation, a manufacturer, has a gross sales of 190 million for calendar year 2021. Its second year of operation, its total assets amounted to 50 million net of the value of the land of 6 million where its manufacturing plant and business operations are situated. Its cost of sales and allowable operating expenses amounted to 100 million and 50 million respectively. Compute for its income tax due for calendar year 2021. So the gross sales is 190 million. The cost of sales is 100 million. So the gross income is 90 million. The allowable deduction is 50 million. So the net taxable income is 40 million. For the regular rate, we are going to use the 25%. Why 25%? Because the net income is more than 5 million and the assets is more than 100 million. Regular rate is 25%, so the tax due is 10 million. Although the total assets net of value of the land is less than 100 million, its net taxable income is above 5 million. No? Kaya nasa 25% bracket pa rin siya. Hence, the income tax rate is 25%, not subject to MCIT since it is in its second year of operation. So, walang MCIT kasi kailan siya magkakaroon on the fourth year, no? Kasi yung first 3 years exempt from the MCIT. Given the same fact under illustration A2, continuation po na ating example, except for the allowable operating expenses which amounted to 85 million, the next taxable income will be 5 million. With this, the income tax rate shall be 20%, no? And the income tax due shall be 1 million. Why? Kasi pag lower lang yung income mo, lower yung tax rate mo. So in both illustrations, 2 and 3, the MCIT shall not be applied since it is only the second year of operation of GPL Corporation. No? So these are the new rates of corporate income tax under the Republic Act 11534 or the CREATE Law. No? So yung dati pong 2% na MCIT, 1% na lang. Yung preferential rate ng mga hospitals and schools na 10%, ngayon 1% na rin. No? Okay. So with that, I would like to say thank you and please subscribe to our channel. Thank you very much.